Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, March 6, 2007. The market's closed, and we finally saw a little bit of a reprieve from the selling that's plagued this market over the last week and a half. The S&P 500, the spiders, closed up $2.44, or 1.7%. So we did see a nice rally. A lot of it did come, though, from an early morning gap as well. And the only people that participated in that initial strength were the people who bought into the weakness yesterday afternoon, and my feeling on that is that they got lucky because there's no seeing a turnaround like that. Although yesterday I thought that the market was getting close to a turnaround level, I said there was no technical evidence of that. It was just more of a feeling than anything, and we are starting to see a little bit of a turnaround. Let's see what this materializes into. First thing you'll notice is that we did have much lighter volume today than we've seen in the last week and a half, so that gives me a little bit of concern. Obviously, it's price that pays us, not volume, so it's not the most important piece of the puzzle, but it does show that the conviction wasn't quite as strong as the fear as the market was selling off. So it's just a little bit of a red flag more than anything. Let's take a look at the intraday action. On the 10-minute time frame, you can see how we got that gap up to here, pulled back a little bit, but then a pretty consistent rally throughout the afternoon here, and it came right to the declining 5-day moving average. So I'm not sure I really trust this market here. What I'd really like to see would be a pullback down towards the 139.10, 139.20 level, and then a rally. I think that's going to be what we need to see happen, is it a little bit of a pullback, perhaps down to there, and I think we're going to have a better buying opportunity once it rallies off of that level, or whatever level it does pull back to, if it pulls back. So there's nothing certain here, and I think for the majority of people, the best position is still probably in cash. You have to be an aggressive trader to be in this market with this kind of volatility and uncertainty right now. But again, we are seeing some technical positives. We've seen this little trend line break, and that's where we had the gap up to, as well as the resistance from late yesterday afternoon. Once that was taken out, that's where the rally began. We can see that probably, well, maybe not. I was going to say maybe we can see that more clearly here in this time frame, but that gives us a different picture. So, you know, it's still rough going out there, and I wouldn't be too confident in your purchases in here. And I would say that most of your positions probably ought to be day trades at this point. So we could look, though, and see where does this market have the potential to go. If we take a look at, let's just take a look from the breakdown point, because that's where the real panic came into yesterday's low. Maybe a 50% retracement gets us up to about 141.45. So there could be a couple points of upside on the next pullback. We do have the right now we do have a short-term higher high right here and this higher low. So it's turning around here in the short term, but we do still have that declining 5-day moving average, which tells me I think we're probably going to see a little bit of a pullback down towards this prior resistance level, maybe not quite that low, before it can potentially rally up to maybe a 50% retracement or so. But the market's clearly not out of the woods yet, so continue to just exercise caution in here. The NASDAQ 100, the Qs, we're starting to see a little bit of a rally in here as well. Let's see what happens at this $43 level. That's where we had this prior support, which we were thinking would be acting as support after the first 2 days of sell-off. Now it's getting up to there. That's got the potential to act as a level of resistance, as some people look at that and say, here's a good place to get rid of my longs, and shorts start to get more aggressive on the market. So it's a potential level of resistance. It doesn't mean it will be, but support broken often does become resistance as people you know, look to break even or look to add to short positions, whatever the case may be. On the 10-minute time frame, same picture here. We've got that declining 5-day moving average, which tells me be cautious. I'd prefer to see a pullback down towards about 42.60, 42.70, and then to buy strength. I think that would be the better way of looking at this market for some upside. We could throw the same Fibonacci off the level that it gapped from down to yesterday's lows, and that gives us about $43.60 as a potential target. So maybe it gets back above that $43 level. Only the market knows, but we've got all these moving averages declining with the 10, 20, and 50-day moving average all in a downtrend. So that says be very careful here. The lack of, or the drying up of volume also tells us to be careful. So don't get too excited about this market, I think, just because we had a rally in here today. Most of it in the NASDAQ, most of it did occur off that gap. I mean, we gapped up about 42.60 or so and, got another 25, 30 cents. So it wasn't as big a day as it might look on the national news when they show that NASDAQ was up 1.6% today and that the Dow gained 157 points. It's not as the action. There wasn't 157 points of action to be had in that Dow. We could take a look at the Dow because I never look at it. So let's try something different. And I can't tell in there. Maybe if we look at the diamonds, we can see it a little bit more clearly here. We got the diamonds up at 120, 135. So there's maybe 80 points that you could have had had you been perfect in the Dow versus the 160-point headline that you'll see on the news. Let's see. Mid caps were up $2.99. That was good for a 2% gain, right back up to that, or close to that 150 level. So we'll see if 150 does in fact become significant to this market. We were looking for potential support because it was such an important level of resistance over here. It sliced right through that, which is why you don't buy support. You wait for the evidence that the buyers have retaken control. And in here, the market wasn't quite as strong because it didn't get up to that declining 5-day moving average. I'd still like to see this market get back to about 149.50 or so, and then buy the strength from there. So still not real clear. Semiconductors were up 1.74%. That's good. That was a 58-cent gain in these spiders, and this is just looking like a dead middle of the range market.